I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market continued to surge to new highs in the last week, rising on the inertia of a 6-week rocket blast. That follows the correction, which concluded on March 4th, which now, since that date, has seen gains of 12% in the S&P 500 and 15% in the NASDAQ. Talk about a rocket blast. That is incredible. And Monday, it continued right where last Friday left off, as the late big close on Friday came as they anticipated that the Federal Reserve Chairman Powell would be on 60 Minutes on Sunday, and he did not disappoint, certainly. He came out and he said that growth and jobs were poised to accelerate, and the only risk that existed now was COVID-19, if that would flare up again. And he said, we can wait to see if there is actually inflation. Wait? Come on, what do you need, a drop kick to the gut? That is a little bit ridiculous in my opinion. We are seeing a surge in inflation, and I know that they want to leave room, and they say they want it to run hot. But that is certainly happening already, and you really have to wonder whether or not they are going to start talking about things. And, well, maybe they are already, because they have made some comments this week about how soon the taper might start. And we'll talk about a little bit more about that, because Tuesday we saw an early decline in the markets. That came as J&J's vaccine is causing blood clots in 6 people. That's a minute, small little percentage of all of the vaccines that have been given from Johnson & Johnson. Still, of course, we don't want people to be getting sick. And that you got to wonder if they're going to stop the J&J, which is a single shot, if they're going to stop that vaccine because of that. I think they're going to be restarting that pretty soon. But after that opening decline, the markets came roaring back after the CPI came out up 0.6%. Year over year, that's up 2.6%. And that is the fastest rate for inflation since 2009. So you talk about, well, Powell's saying we can wait to see inflation. Well, don't you see it? It's up 2.6%, but the market didn't really care because they expected that it could have been worse. Maybe the CPI up 0.7% or 0.8%. Anyway, they can always make an excuse for the market to go up, and that's what happened. Also on Tuesday, Bitcoin jumped over 64,000, eventually making it over 65,000 as a high, which was pending the Coinbase listing that was coming out, and was kind of a domino effect because Coinbase listing had Bitcoin jumping, and then Tesla moves up because they have $1.5 billion, and now maybe it's worth $2 billion of Bitcoin, and that affected the NASDAQ, which moved up. And the NASDAQ had big gains on Tuesday. So that all happened. But then the NASDAQ softened a little bit later in the week as we saw Bitcoin moving back down to 60,000. And that news the news that affected it was that Turkey came out, and they've banned transactions in Bitcoin that are really joining other countries, and that's going to happen more and more, and I would be very, very surprised to see Bitcoin not have a massive decline later in the year, and I'll be bringing some videos regarding that sometime in the next several weeks. Wednesday, Powell again came out, and he said, Well, they actually would taper ahead of rate increases. So there it is. There's the leak starting to come out. He says we do it like we did in 2013 and 2014. Actually, they did begin to taper well ahead of the increase in interest rates by a couple of years. So the Coinbase direct listing did happen on Wednesday. That's direct listing, meaning it came right out on the NASDAQ. There was no regular IPO, no underwriting on it. And it opened at 381 and directly fell to about 310. That did affect the NASDAQ again because when Bitcoin goes down, as it did on Wednesday, that affects Tesla and that affects the NASDAQ. So that was a pretty good downside day for the NASDAQ. It was actually the worst day of the week for the market, despite strong bank earnings that began to come out. And simply what has happened is that the banks just ran too far. And they're no longer considered value. They're not cheap anymore, the bank stocks. So they got way ahead of it. And as these good bank earnings are coming out, well, the market kind of likes it, but the bank stocks are not performing well based on that. And they've had a great trading environment. That's really what has helped these bank stocks. Thursday, just to illustrate the oddity of the market that we have right now, retail sales, they were up absolutely huge. And jobless claims, well, they fell pretty significantly, and those numbers were both much better than expected. But bonds screamed on the upside. Yields fell very, very sharply. We saw 10-year yields fall to 1.53%. I'm going to show you some charts in that shortly. And that was from a peak of 1.76% just a couple of weeks ago. People are asking, what is this crazy market that we're looking at where you could see the stock market moving up and all of these numbers fantastic that are coming out as far as economic numbers, and then the bond market, goes up and yields fall. Well, what really is being speculated is that there's a stock market reversal out there and that investors are getting ahead of it. And what they want to do is make sure they own bonds before the stock market starts going down. But maybe that actually is technical and temporary, where you saw the yields fall that far down. Again, I'm going to show you some charts in that in just a few minutes, and I'm going to do a little teaching around cycle analysis, and I think you're going to find it really interesting. So make sure you watch that part of this show. Friday here, we're recording this now around midday. We do that always on Friday around lunchtime. And the stock market was firm again on big earnings out of Morgan Stanley, much better than expected. It happened all week long. JP Morgan, Goldman Sachs, Bank of America, all week they had good earnings and the stocks didn't go anywhere. And the same thing for Morgan Stanley today. The bank stocks are not leading it, but the investors are happy to see those good earnings come out. And overall, the stock market is strong despite the fact that the financials are going nowhere. Simply, they just got too far ahead of it. Stocks are actually mixed here on Friday, as sellers did come back into the NASDAQ. It's around flat. And Russell's pulling back a little bit, and the S&P 500 is up small. So it's kind of a mixed and quiet day, but we've seen a lot of those days here as the market has moved up. It moves up and then just kind of sits, is because there is a seller's strike going on right now, and nobody wants to sell and get out of their position when it's moving up so quickly and with all that strength in there. So eventually the sellers will come back, and there's a very, very overbought condition on the short term in the NASDAQ, so we'll probably see some retracements coming in there. And the bond market's weird action, which had it moving up so sharply on Thursday, is being reversed a little bit in here as the 30-year bonds are down over a point. So some of that is partially reversed in the bond market here on Friday. For stock market overall, we have been talking about a high in May and June, and that hasn't really changed. We still see the strength, and even though we expected a peak to be a little bit lower than where we are right now, we still, we don't change our timing in here. What it does do is it raises our upside targets. And we talked about that in our Future Speak show. And we will continue to bring that for our members. And if you watch that show, on Wednesdays for members, you'll be able to see what our upside targets are. And though we do expect the market to hold up into this late May or June period, I think volatility is about to jump as the upside inertia ends on the short term, and that may actually be just minutes away. Because I'm going to show you at the end of the show that we do expect to get a pullback in the next few days. Coming up, actually, in the rest of the show, we're going to explain the technical side of this bond market action and this kind of temporary pullback that we've had in yields that we believe. We'll be looking at the 10-year TNX weekly and daily cycle analysis. Also, we have a special coming, also a peek at the home builder analysis. We're going to show you that XHB, and that's a peek at a member video. And then I'll do the stock market analysis, and we're going to look at the short term, the S&P 500 and the VIX. So a lot of great stuff that's coming up here in the rest of the show. For the week, stock market, major indexes are up about 1%, maybe the Dow a little bit less, the Russell around unchanged, as it still is remaining the laggard. I had one big up day in there, but overall still lagging. Bond market for the week, 30 years up about a point. The 10-year fell 10 basis points, so that's pretty significant. Right now it's at about 1.58 after making a low of 1.53 earlier in the week. Gold market, strong, got some good legs, up about 2%. That's about $33 to the upside in the gold market. Silver up even more than that, percentage-wise, closer to 3%, up 65 cents or so on the week right now. Dollar falls about 0.7%, so that would be in line with being able to give the metals a boost. This is the second week in a row of moving down pretty sharply, but we do believe it's about to turn back to the upside again, which could put some pressure back onto the gold market. Oil just soars up about 6.5%, $3.80 now to the upside, and that comes out as OPEC and the IEA, the International Energy Agency, says that they see bullish demand coming for the energy markets, and the energy market gets that very, very big upside movement. So that's the opening of the show. We have lots of great stuff coming up here, so please do stick around and watch. Just tremendous information coming out, and a very, very good special that you'll be able to get. All right, so if you're new to us, we especially want you to go to askSlim.com and explore the website. We have so much on there. Also, you can become a free member or take advantage of one of our specials. YouTube, if you're watching it, please do subscribe to this channel. Click that notification bell and you'll know when we put up videos, which we do regularly. And please do give us a thumbs up if you like this video. That does help us with Google. And if you use Twitter, please follow us at askSlim. Matt is is our great COO here, and please write to him for membership information. Any questions that you have on our huge offering of education and analysis. All right, so we're going to look at Treasury yields here. We're going to look at the TNX and do cycle analysis on it. This is a good opportunity for me to present cycle analysis to a lot of people that are watching us for the first time. And this has been an odd week because usually in the case of a market that moves up very sharply, you would have rising yields. The bond market would fall as there's no need for a safety bid because the market is so strong. And then there would be the potential for interest rates going up because if everything is so good, then the Fed would act to raise interest rates, but that's not what happened. 10-year yields fell about 10 basis points on the week, and it's a very, very odd week. And there's a lot of speculation out there that investors and big fund managers may actually be getting ahead of what is a stock market reversal and buying a lot of bonds. Of course, on Friday here, bonds are pulling back a little bit, but it has been a very, very good week for the Treasury market, and a bad week or declining week for yields. Now we're going to take a look at a chart right over here, and this is the 10-year yield chart. Now there's a lot of lines on here, and for those of you that are looking at this for the first time, this style of analysis, you could say, wow, some people call it spaghetti, or one of the messiest charts they've ever seen. And those people that do understand what we're looking at, well, they really get it. What cycle analysis gives you is a visual depiction of money flow. And you know how important money flow is. It's simply the driver of the market. What we have on here is cycle analysis and also momentum analysis, which is always an important part of our analysis. And we do support resistance analysis, and those are those red boxes or green boxes that you see in there where we establish resistance level or support levels, which are just phenomenal. Let's take a look right in here, and what we have here on the bottom are called cycle brackets. There are many of the charting platforms that have these cycle brackets, and what they are is a guide of the ideal cycle rhythms in the market. Cycles are measured from low to low, and these vertical lines in here are showing you the actual lows in those cycles. And over here is the ideal low. So if there was a perfect rhythm, if you had a perfect halfway up and a perfect halfway down, the smaller ones are what we call the minor cycle. So this is the dominant cycle in here, and this is the minor cycle. And you see in here these lines, you can see that we have the minor cycle kind of outlined for you, showing it how it actually traded. Versus what the ideal cycle would be. When you get a lower low and a lower high, you have a configuration that is negative. That gives you a sense that the market is in a negative trend or declining mode. When you begin to get a higher bottom, as you got right over here, then you base out, and it tells you it's likely that the major directional component, which was down in here, was changing. We turned bullish at this point on yields, or negative in the bond market, and declared a bond market bear market at this point. And this you could see as the momentum indicator, and the momentum indicator has been smoothly to the upside during this period. So let's look at where we are right now. We're just going to look at these last three cycles right in here. And what that shows you is that you had this positive cycle and then another very positive cycle when you have almost no time to decline because it rallies up to 90% of this whole cycle. You don't get very big pullbacks, and that tells you you're going to get bigger rallies, as you saw right in here, as yields continue to go up. So where are we right now? That's the key. You could see the minor cycle in here coming to a bottom. So this decline in yields, or the rally in the bond market, was perfectly timed as far as the cyclical patterns go, or the technicals. At the same time, momentum is still strong, and this has basically maybe another week or so. Maybe it tests this low at 153, and then yields are likely to go up again. And if you've been following the action between yields and the metals markets, you know that when yields are rising or the bond market is declining, the gold market has not done well, and we're actually thinking that gold's going to be peaking pretty soon and begin to move down again, and this is in alignment with that. So I'm kind of jumping all over the place, but you could see that this decline in yields, just as this mid-cycle decline right over here was barely recognizable, and this mid-cycle decline here, once that's over with and you get into the next minor rising phase, as is coming right over here, yields then move up again, or the bond market moves down again. So there's not much time in here for these declining yields, and we're likely to start to see yields moving up again. So in answer to the question, what was the odd action that we've seen in this last week where the stock market is very strong, but yields are falling instead of rising? It's this technical condition right over here that caused it right there, where you get the decline right in here, as right in here, as right in here. That gives you that time frame for a minor pullback, and then likely yields to be moving up again. So that makes us bearish right now in the bond market starting soon. Well, let's try to pinpoint that a little bit. Here is the daily chart right in here, and you can see that the cyclical patterns in here are beautiful. The declining phase right in here, the declining phase right in here, the declining phase right in here. You see the beautiful rhythms on these lows. And then this, which was what we call a left-hand translation, where it made its peak right over here on the left side, telling you that the market was in a correction and looking like it's going to decline for another week. So we could see maybe there's a variance in here, maybe 3 to 6 days where the yields continue to move down, test this 153 low, and then begin to move up again. So if I put up the side-by-side right in here, you can see that what we are is in the corrective phase right in here and right in here, and likely to be with yields moving up again. This is just a technical condition that you see in here, and I want you to see that these cyclical patterns are just absolutely phenomenal. And what I want you to do, if you want to learn more about this, is go to askSlim.com. I'm trying to get this visible to you. And you can go to our cycle analysis workshop tab, and it gives you a lot of information about cycle analysis in there. And here's that daily chart again as I dance all over the place, and you could see those beautiful rhythms and all of the information. This is the slim ribbon, which is the best momentum indicator you will ever have. And when you combine that with the slim ribbon PO, which is the signal indicator on the bottom, you get unbelievable signals. You can see all of this upward momentum right in here, all of these signals right in here that says that yields are going to continue up, and now having gone neutral right over here as you see it turn blue. So we'll see when it establishes green again, it will be telling you that yields are going up again, and we expect that to happen in a little more than a week. So that is the analysis on yields, and an explanation for you why we believe that the 10-year yields pulled back and the bond market rallied. All technical, all cyclical, and I hope that was great teachings for you where you become interested in learning cycle analysis. I think one of the best ways to look at charts, and once you learn it, you'll never look at charts the same way again, I promise you. I've been doing this analysis since 1975. Absolutely incredible. 46 years as a cycle analyst, so it's kind of in my blood. And I invite you to learn more about it by going to our workshop tab and seeing the information there. So that is the explanation for why yields fell and the bond market rallied in this last week, and how technical that is. All right, so now we have something special for you, a special peek of our home builders video that Arvi did for our members. He's also going to do some teaching around the cycle analysis as he looks at the XHB and one of the home builders, and I think you're going to find it incredibly interesting. Again, we're always teaching. We only want you to learn this stuff because your success is really what brings our success. Here's a little special peek of that home builders analysis.
Okay, so this is the XHB weekly cycle chart here. For the XHB, we have a dominant weekly cycle, which is then broken up into these minor thirds. And what we're saying here is that there is a dominant money flow pattern, which is then broken up into these minor money flow patterns. And I have drawn in how the dominant money flows have formed over time in this bolded line here, and how the minor money flows have formed over time in this lighter line here as well. And what you'll see over time is that these minor money flows as well as dominant money flow patterns have been really very, very clear. So where are we now? We are still in this intermediate term rising phase in the XHB. Our weekly momentum is firmly positive, as you can see here with this arrow being firmly pointed up. So that just is evidence to how strong XHB has been. One thing I do want to note here is that we are getting very far from our 34-week moving average. This is a 34-week simple moving average, this blue line here. And what this indicates is that we are due for some chop to really set in here in the XHB. So what we're looking at is, if we look at this minor cycle low, which is due relatively shortly here, we would look for just a very minor dip and then another retest of those highs and likely a new high, and then for this to roll back down into this key dominant cycle low timing. Now the dominant cycle low is due 6.7 to 7.5. So overall, a very positive pattern here in the XHB. We will look for this to then set up another move back to the upside, likely in the late summer of this year. If we shift over to the daily chart, we have our shorter term cycles here shown on this chart. And what's going on, if I zoom out, I just want to show you the consistency of these cycles. So what we do is we add in these purple ovals so you can see how the daily cycles have formed relative to the idealized timing, which means relative to the troughs of these cycles. And they have been really very consistent going back to that March low from last year. So let's go ahead and zoom back in. So what we're doing here is really rallying for most of this cycle here, which is a really bullish thing. And what we're looking for is just a very mild pullback, likely to test this rising 21 period simple moving average, followed by a retest and likely a new incremental high, as I mentioned on the weekly time frame. And then we would look for this to then roll over. So this is really what we would look for in that likely mid-May time period, is for a high to form in the XHB. The next short-term low is due 422 to 55. Now let's go ahead and look at the next one. We will look at KB Home. So this is KB Home. For KB Home, we have the dominant weekly cycle here, which is then broken up into these minor half cycles, as you can see here. And I just want to briefly walk through why we have these cycle brackets on this chart for those who are new to our work so that they can visualize it. So for KB, you can see back in August of last year, we got into this rising phase with our dominant cycle rising, as well as the minor cycle rising. This is a time period where you look for impulses on the upside, and you can see the beautiful impulse that we had here in KB Home. After that, we formed a bull flag. Why did we form a bull flag? Well, you can see that we had our dominant cycle still rising and early, and we got into a corrective period on this minor cycle. That is what forms the bull flag, and you then get a bull flag breakout when you get into the rising phase on that minor cycle. So that is super clear. And then after that, we got into a corrective period here where we had two cycles pushing down, with the dominant cycle pushing down as well as the minor cycle pushing down. If we look forward, you can see the rising phase here with two cycles pushing up and the beautiful rally that we had. Then we had a little bit of a flag form here into this minor cycle low, and then the rally off of that minor cycle low here, and then the pullback to form that next key dominant as well as minor cycle low here. So that really played out very clearly as well. And now if we look forward, we have two cycles pushing up, with the dominant cycle pushing up as well as the minor cycle pushing up. You had this nice rally. We had this little bit of a bull flag that formed here into this minor cycle low, and then the rally off of that minor cycle low. And we are really still rising here on this dominant cycle. On the upside, we have a major 61.8 here at 50.26 and an intermediate 100 at 53.39. That's really the zone that we would look for it to hold here. We would not look for KB to get much further than this 50.26 level. Then we would look for this to roll back down on the downside into this next key intermediate term low timing, which is due 6.7 to 7.12. And then we would look for another impulse back on the upside here in the late summer of this year. If we shift over to the daily chart, you can see this bullish cycle that is forming here on the daily, where we're basically using up this whole cycle rallying. we would just get very likely a very modest pullback here, and then get another new swing high to likely form in KB in May of this year. The next key short-term low is also due right around the other home builders that we've looked at, which is 427 to 510.
All right, great job by Arvi. Arvi is just a fantastic technical analyst, and he also is very much in charge of a lot of our analysis, where he brings the trade ideas for our level 3 and 4 members. So just absolutely great work by Arvi, and you can see a lot more of his work if you do become a member. To get that full video, you need to be a level 2, 3, or 4 member. So please do sign up. Thanks, Arvi, for that really great work. I want to talk a little bit more here. You can get all of our information by taking advantage of, well, several things coming up. I will be speaking at the Wealth 365 Summit, of which there are over 50 speakers in 6 days. These are just tons of top name people in the industry. This is going to be a great event. I'm going to be speaking Thursday on the 22nd of April, next week, and at 3 p.m. Eastern Time. You can get the special sign-up link for that. We're going to put it on this posting, so do look for that. You could sign up, and please sign up that way. I'll be speaking on momentum analysis, the key to trading success. We have looked at momentum in everything we showed you so far in this video, and I'll be doing that again moving forward. It is a very, very important part of the analysis that we do, and I'm going to be speaking on several different variations of momentum analysis and the tools that we use at this event. So I think it'd be really great for you to come and participate. I'll be speaking for about an hour. I'll be doing a Q&A. And at that event, I'm going to be offering a special for the Wealth 365 attendees. But we're going to give you an opportunity. We're making an early bird offer here, and this is only good through Thursday, the 22nd. The offer that I'm going to put up on Wealth 365, I'm going to offer to all of you right now. This is great for people that are on our free levels or level 1. You can upgrade, or people that have not been members. This is for our level 2 membership. What you get is our stock index report live stream. This is amazing for short-term traders on the S&P 500, the NASDAQ, and the Russell, where you get our reversal scout, which is an amazing momentum indicator. We're sticking with this momentum discussion, and that also gives you the support and resistance and acceleration zones to catch the big trades. This is live. Right on your computer. You don't need any special platform at all. You're going to love it when you see it if you're an active trader. You're going to get also our daily, every day you get the stock index report. Matt does an outstanding job on that. It's deep analysis on the indexes. You're going to get everything that we put out there on a daily basis. Fantastic. Also the weekly stock index report, a little longer term view, weekly ETF review. And you'll get our Slimulator Momentum Tracker. This absolutely will blow you away if you have not seen it. It's for position traders or long-term holders. It's a 3 to 6 month view on over 1,000 stocks with our programmed in with our algorithms that give you all of the momentum conditions, and an output that gives you the sum of the evidence and a really important directional bias information that you need, and give you a great sense to what to hold on to, where there are issues maybe in stocks that you're holding. So a great way to compare groups. There's 22 canned groups in there. You're just going to love it. It's included in this, and you get our whole library, over 500 videos now in 9 categories, actually 10 because we're adding internationals. So it's amazing. All of that. How about all of that for a month for just $22.50? If you subscribe for 3 months, you're even going to save more. And write to Matt at askSlim.com, and he's going to send you that discount link. Just ask him for the special Wealth 365 special that we're having through Thursday for that discount link. and you're going to be able to just see so much of the stuff that we put out, and you're not going to believe how much you can learn. Imagine all of the videos that we have put out there that you can look at on tools for techs if you want to learn about a lot of things about charting or trader psychology, lots of things about issues that you may have as a trader, style, strategy, and plan, and of course future speak, where I look at and analyze 24 different futures contracts every Wednesday. All of that just $22.50 right to Matt at askSlim.com for that special. Remember, only through Thursday, so do it now. Okay, we're going to look at the stock market here as we get into the final part of the show here. We're going to take a short-term view. We're going to look at the S&P 500, and we're going to look at the VIX. For quite a number of weeks, actually for a few months, I have talked about a correction that was due into March and then another rally to new highs. And that's almost exactly what happened. If you look back, several months, we were looking for a deeper correction, but then as the market told us so, we raised our projections for that correction to 6 to 7% for the S&P 500. It was actually 5.8%, even though the Russell and the NASDAQ were down 11.2 and 12%. So it was, in some things, a pretty good deeper correction. S&P 500 pretty shallow, and then moved up into this time frame as expected. And we continue to believe that the market will be firm into late May and potentially into June, making higher levels. Let's take a look at that analysis, and we'll take a look at the VIX and see what the implied volatilities are telling us also as we look at cycle analysis. So we're going to switch this over to the SPX, and I'm going to move over to the daily chart. And I want you to see something in here. So we have cyclical analysis in here. I know this looks like a busy, messy chart, but there are very, very important pieces of information in here. First thing I want you to note is that the cycle rhythms that are on the bottom, these cycle brackets, are the ideal. What we've added in here is momentum analysis, support resistance analysis to the cycle analysis, and the phenomenal slim ribbon PO on the bottom, which is your signal indicator for momentum. What's important to note is that between each of these very clear cycles, it shows you how many days, and they're averaging now, when you go back into the last summer of 2020, about 28 days. And this bracket right over here, what we call the dominant cycle, is set at 28 days. Let's just look at these last few cycles right over here, and something really phenomenal is happening. And that is this peak. See this low right over here, which was that end of that March correction, to this high right over here is 29 days. This is just incredible. And the distance that this moved is about 12%. And then NASDAQ made about 15%. And this is one of the biggest moves that we have seen and one of the most positive cycles that we have seen. And that only happens when the more dominant, longer time frames are very, very strong. It only leaves a brief time for correction because of each of these cycles are, averaging 28 days. This was a short 24 days, and sometimes you get a long one after that. It only leaves a few days for decline in here, maybe 2 or 3, which we expect to happen. We expected this would move down to as late as the 20th, which is early part of next week, and decline 2.5 to 3.5%. Sure doesn't want to give any ground yet. Now I want to show you the similarities in here in some of these cyclical patterns. And that is, if I look at this one, I'm just going to blow this one up right over here. That one was a 30-day cycle. It made its peak in the 27th day right over here and then came down. You can see that. So that decline was a couple of percent on the downside. And if you look at this cycle right over here, that was the day 28 that it made its peak in on that cycle right over there. And when you do that, you're under very bullish conditions, and you can see a brief decline. This one was pretty sizable right in here as it fell from a high of about 38.70 down to this low at under 3,700. So it was like a 175 point decline in just 3 days. So you can get some pretty sharp declines in these yellow phases that you see in here, and there's one due right over here. So we're looking for a decline in here. Now the slim ribbon is showing you this positive momentum condition right over here, and the slim ribbon PO, the signal indicator, has been giving you these positive signals. It went neutral right over here for just a brief period of time and then turned green again, as this is all positive. We actually don't expect this to turn, maybe it turns blue for a day or so, but then likely to be moving up again. This is the next middle cycle right over here. I want you to note these are called the complex structures of the cycles. We only do these on the indexes, and it moved to a level of an extreme high channel over here, which rarely happens. And the distance now from the 13-day moving average is pretty far, and almost every single time when it does that, at the end of the cycle, it retreats back in the yellow zone, back to the slim ribbon, as you can see right in here, and that's expected to happen right now. So we're looking for a few-day pullback in here in the S&P 500, and then be moving upward again. Now let's just talk about projections. Well, this was the highest projection that we had up over here, about 4158. When I'm not going to show you the weekly chart, this is just a short-term view. But if you go and watch our Future Speak show, you will see the upward projections, which take you potentially up over 4,300 over the next couple of cycles in here, or into late May or early June. So this is a very positive structure that you're looking at, only looking at for a minor decline. So when we're doing our peak analysis, I often try to look at what the information is out of the VIX. And here are the VIX cyclical patterns that you see in here. And you can see that there are a big dominant cycle that bottomed right over here. The intermediate cycle bottomed right here, and then these minor quarter cycles. Here's your minor quarter cycle, your minor quarter cycle, your minor quarter cycle. That says that you're about to get a pop in implied volatility. That's in line with the pullback that we're looking for in the market. However, we don't see any significant peak in the market until actually mid to late May. When I look right over here at the timing on the dominant cycle, that shows you around May 18th. And then the next one over here points to way out in August. So we don't think that that one is going to be the one that gives you the peak. It may likely be as we look into this mid to late May period where the market actually peaks. So what this analysis tells us is that the stock market's about to have a pullback and a minor peak in here where implied volatilities pop. Maybe they only get to 17 or 18, and then they pull back again, expected to go back to this 15 level or a little bit lower out towards the May, let's call it third week in May would be about the average. Here's the weekly pattern right in here, and you can see in here this also points to implied volatilities beginning to peak and then come down again, and this points to early June. So it's late May, early June, and then moving up again. So for implied volatilities, that shows you we're about to get into a time frame of increased implied volatilities, but maybe not all that much. And what this points to is late May to early June, where the ultimate peak will come in the S&P 500, and that's really what we have been projecting, and the implied volatility, the VIX, is agreeing with that. So again, what we see for the S&P 500 is a brief pullback coming here in the next several days, and then another upside move, and which ultimately probably takes you up well into the 4200s, maybe into the 4300s in the S&P 500. It would take a very sharp decline in the stock market very soon to give us a worse scenario than we have right now. Momentum conditions in all time frames are positive. The only laggard is the Russell, which may continue to be a laggard or may pick up and catch up. But overall, all of the conditions are positive in the stock market right now. That has not changed, and our ultimate targets outside of a minor pullback coming up here really don't take us to a peak for another, we'll just call it 4 to 8 weeks for this incredibly strong bull market that we're seeing right now. That is it for this show. I hope you found it incredibly informative. When you review everything, if you're watching this clip on only the stock market, go back. We did some great pieces on the whole show where we looked at RV presenting analysis on the home builders, and I showed you great analysis on the TNX, the 10 years, talking about bonds. All of that is very important. Some of you may be looking and saying, well, where's the analysis on gold? Where's the analysis on silver? Please do become a level 2 member. Use the special that we talked about in here and watch the Future Speak show. That's where we do that full analysis on all of those futures. I think you'll find it incredible. The special we're running now, $22.50 for the first month. Save more for 3 months. Write to Matt at askSlim.com and he'll send you those special links for that. Please do become a level 2 member. Support us and support yourself in the growth of your knowledge around the markets. I think you'll find what we present to be absolutely phenomenal. We want you to be more and more successful because clearly your success is our success. Please do go to our website, learn more about that on YouTube, subscribe to the channel, click that bell, and you'll get notified on all of our videos. Give this video a thumbs up. And make sure that you go to our playlists and watch some of our past shows and member videos that we have there on YouTube. Follow me on Twitter at askSlim. And do write Matt at askSlim.com for our membership specials, any info and questions on everything that we offer. I want you to be so unbelievably careful because it is so crazy out there. And I'm always wishing you great trading.